Good morning. It's about 20 after 9 on the 22nd, a Friday, February 2019. From marketwizards.com and eminywizard.com, reminding traders to use risk capital you can afford to lose if you're playing this game. There's a lot of head fakes, a lot of back and forth, and a lot of mysterious moves. That's one reason why we advocate day trading as opposed to holding and holding and holding. Everybody says trend trade, but it's not as easy as everybody thinks to do that. It sounds good in theory. Let's take a peek. We're taking a look at, obviously, the recent range. Yesterday's low, an undercut low, and by undercut, I refer to it takes out the prior low, but it regains it. And I had suggested don't be faked out by this, that we could go lower, but for now we had to trust the idea that we were at the boundaries, and end of the day, it would be a lucky trade to get any lower to tackle knocking out those 63s to 62s. So far, that's still intact. We had a pretty strong bounce into the close. We had the pullback, and it refused to come back any further than this 70 area. And I'd said at the time, I thought the model should be that 68, 67, and probably supportive. And we never even did get that far back. So when you go to bed and you're sleeping through it, you can see where the launch comes from. Doubling here at that 70, then they take out that 80. Remember, we had that 77 idea, and then we said the 81s, 82s will be key. And overnight they bust that and get up, and they close the gap. They retest SOC, scene of the crime, 85.5. So that's why the call this morning for, well, let's use 88 to 92 as our resistance zone. Could be it keeps on chugging, but the convenient trade says try to come backwards a bit rather than just buy the high. So this chart, very helpful to see that bigger perspective and the inside day that so far we believe is the most likely idea. So I think we've got probably whack-a-mole, which means that we will make higher highs, higher lows, and pullbacks get bought. If I'm wrong, then we will take out 70. So I think for the morning opening trade, if you've already got, I said jump up and down, hug the dog and the wife if you get back to 82 to 81, because this is where traders got trapped. So if you had a short that you tried pre-market, we were suggesting make sure you were paid where traders got trapped at this reversal right here. So subsequent trading will show us today who's really in control and who isn't. But as long as yesterday's low is intact, the market is still trying to get up and print that 2,800 and 2,800 plus, as we've talked about. Let's look at a couple other charts. And again, these are one man's opinion. You know, I don't have all the answers. I'm just telling you how I use these charts to help and try to locate the smaller trades within the larger ones. Now, here's our intraday chart. We know that the middle is back here at 79. So we've already got a 4, meaning a 40% pullback intraday. A 50 with the current range gets us back to the 79 to 78 area. And 77 is a 60 back. So that's the diagram that I've passed along to you, and I'm going to put it back on a 10 so we can see a little more perspective. And this is my idea currently of support ahead of the gap back here. And the natural area for the market to migrate to, I believe, is this 81 area, as I've posted. It reflects yesterday's middle. So we're going to focus on these pivots right in here in this 81 area today. That will be key. And I think small. So we shanghaied and trapped traders from yesterday and already starting to eat into their profits. And that being said, the market still has to respect this area that we had talked about yesterday. That area is also going to be a key. So we're generally using that idea right now for that first thrust, and this thrust usually causes a little bounce, right? So right now, this is all we know is this is a fairly tight range that we're in since we've been up. And I got up early today, took a look, and I said, "Geez, that's why we go home flat." So you don't get back what you made the previous day. But it surprised me to see that it was already pounding the table to close that gap and test that 85. But nothing should surprise us in this business. Monthly look, we can see how we held that platform right here. Here was our doubles holding. So now we're back up into this territory, and the longs really do need to try to keep it up here and push and higher, or else we're back here where we can see a lot of time has been spent from this 83 back here into this 69 to 70 area. So the odds favor some penetration backwards, but I still think we need to be careful thinking, we're going to take out yesterday's low. I think that low is in and probably the high for now. But I would think we still may make one more high today before we're done. And if not, then so be it. So first things first, convenient traders looking to come back, test the middle. You get lucky if you get below that. And then don't forget the gap is back here in that 74 area. And I think either side has problems thinking just a big trade in the opening swing. Think very small. Good time to be sidelined if you're a conservative trader. All right, so here's our angel and demon 85 set up as our demon is 79.5, the middle. This is a key point. That's the middle area. You can see how this was a demon that got beat. So a lot of traders in here got trapped. And then overnight, you can see that gap, how they use that 74 to leg off of that. So here's what I'm saying. Program trade started right here. Double, program trade, squeeze, all in lower volume. If you are a conservative trader, you will think small. You'll risk 2, you'll try to make 2. Ultra conservative sidelines for the open. And current thinking right now is this has been the convenient trade and that we're trying to find resistance today. Yesterday, we were trying to find support. I believe support has been found. And don't think big swing in either direction. So currently, we've got the obviously 85 to 88 as our resistance. And we're going to think aggressively today that be paid if we get a pullback coming this way, be paid into that 79 to 78 area. If we get back there, really good fortune, and below that is just a home run. I think the fix is in to squeeze a bit more higher. And that's why I've cautioned thinking too big on the short side. Remember, this is an educational room. We're trying to help you understand the nuances of trading. I try to help you with some calls, but it's more important you're learning the ideas and how these squeezes take place. Here's a 10-minute chart so that we can see this distance. The gap up here, And the 5-minute chart, we'll see less territory, but that's the one we want to use. You can see how the 10 helped us yesterday for support idea. So we are using the 85 to 88 resistance. Anybody wants short side? And a reminder, the middle zone is going to be this 79 to 81. And the last thing I'm thinking about today is a plunge. If we get that, I would be very surprised. Zika has posted 78, half gap. And that's probably very appropriate based on the things we've been looking at. Here's a 5-minute chart. And this is where I had suggested pre-market, make sure you're paid coming in here. 5-minute chart. This is the 3-point break back here. And I expect a fairly choppy open. And if you want to put this on a 10, you can see the 10 and how we got up above the rain line and scooted up, and then green, red, blue. And just below us, that 79 area. And obviously, if you want to put it on a 15, here's your 15. So they make us ultra conservative, or at least they make me ultra conservative when they take and do these jams overnight. And they run the stops, basically wipe out, stops on the shorts. So this is not an easy pattern. And you can see why with the 15-minute chart. I've suggested conservative nature and good fortune if we can get below this 81 area. And don't overtrade. There's not a lot of news out there right now. Don't overtrade. I'm going to think this is a two-way day. But giving the edge to the longs.